2023 is here, whether you like it or not. So start today. To get a head start on your trading strategy for 2023, it's important to first review your performance at 2022. This can help you identify any patterns or trends that may be useful for your future trading. For example, if you notice that you're consistently making profits, trades on a particular type of asset, you may want to consider focusing on that asset. Additionally, reviewing your performance from 2022 will help you identify any weaknesses or areas for improvement in your current trading strategy. Maybe you will realize that you tend to make impulsive decisions without fully considering the risks, or perhaps you struggle with managing your emotions during volatile market conditions. By recognizing these areas for improvement, you will take steps to address them and increase your chances of success in the new year. Hey there, Tamir from Fibonaccis-Traders.com here with the daily market recap. Please hit the like, subscribe, and let's hit the charts. We'll start with Apple. As we can see, breaking below June's low, now heading towards this trend line here and the 122. This trend line started over March 22 as resistance, then July, October as support, and now Apple, by joining Tesla on the dark side, is heading lower towards this trend line at the 122. SPY basically moving sideways, but we can see bearish sentiment. Bears are pushing price to the downside, and maybe 370 is next support that needs to hold. This 370 is also the 618 Fibonacci levels for this retracement, for this uptrend. QQQ, nothing bullish, and the Nasdaq going down to revisit October low at the 255, 254 area, and if it will break down and under, we have this trend line over here. So if 254 will break to the downside, we will see 244 and also 230 together with this trend line. This trend line holds the lower lows of the QQQ since October 2021. Keep your eyes on these levels to the downside because no trend reversal at sight. Dow Jones struggling to hold, but as we can see, 334 area is holding as strong resistance because it was a very important support, now resistance. So follow price, use levels and trend lines to manage risk, because, as I always say, the only thing that we traders have full control of is how much am I going to lose and how much am I willing to lose on each and every trade. Once you change your mindset from how much money am I going to gain, how much money am I going to make, to how much money am I going to lose. And if I'm going to lose on each and every trade, how much am I willing to lose? How much am I capable of losing? Capital size and on the psychological side. IWM, also we can see full bearish sentiment going towards the 168, and if this one fails to hold, 162 will be next. SMH breaking below the 200 and going towards close this gap. Not surprising, because 80% of all gaps will get filled at some point, and the sooner the better. Now this gap is filled. It doesn't mean that we will have trend reversal. We need to follow price, use levels to manage risk. Next support that needs to hold is the 190. Looking left, it was July's low. Then we can see during September all the way to November, price just hovered up and down this 190. So eyes on the 190. Natural gas keeps continuing to the downside, and 531 broke, now 474, and all the way to 410. Check previous videos, and more than welcome to follow me on Twitter to see that everything, all the levels were given in advance, nothing in hindsight. Crude oil consolidation above the 78. Let's see where it takes us. Gold looking pretty nice. Short-term uptrend channel bounced. We can see triple bottom of the 1600, then bounced up. Now some kind of consolidation to the sideways, but still holding this short-term uptrend. Tesla held the 109, 110, started nice. If we go inside, let's zoom in. The 15-minute chart opened with a big candle, bullish candle, and then just moved sideways inside this range. So this range, the 116.20 and the 108.15, this range will be the range that I will watch tomorrow, Tesla, for intraday trading. Netflix holding barely this trend line, this yellow trend line, still inside uptrend channel, but as we can see, bulls are getting weaker by the day. So if you are long position on Netflix, this is the time to start managing your risk much more tighter, because if the 276 will break to the downside, 263 in my opinion will be next, and if this trend line, the red trend line, also will fail to hold, 246 will be the next major support that bulls will have to work on. Because if we look left, the gap, April 22 gap, opened here, and then it was a very strong resistance. So keep your eyes for now to the levels to the downside on Netflix. Nvidia, downside continuation, 133 needs to hold. 133 is the 618 Fibonacci level. Retracement for this uptrend now needs to hold. It also was a very interesting support and resistance area throughout September and October of earlier this year. Shopify trying to hold the 50% retracement Fibonacci level at the 32 area. Close this gap here. Let's see if Shopify bulls can hold and maybe make a bounce, or if they give up, we have these levels to the downside to watch. Microsoft slowly grinding down towards the 231 and to this gap here at the 228. This gap will get filled. We know once again, more than 80% of all gaps will get filled throughout time. So if you're trading, doesn't matter on which time frame, if it's the 5-minute or the monthly, once you identify a gap, keep in the back of your minds that this gap, 80% chance will get filled. Doesn't matter where the gap is or where price action is relative to this gap. If we go left and look left on Microsoft, we can see not long ago, August, we have these two gaps here at the 283 area. So in the back of my mind, I know that 80% chance that this area will get filled. Not now, but once the market and Microsoft will start an uptrend or some kind of a bullish trend, I know that 80% chance this gap will get filled. So I put it in my risk management. Amazon, slowly grinding down on this trend line. Nobody talks about Amazon. Amazon is 53% down, 56% down since November 21, all-time highs. Everybody's watching Tesla, everybody's watching Apple, but Amazon is falling apart slowly, sliding on this trend line. So, as you can see, bears full control going into 2023, and once again, start today. Go over all your trading journal of 2022. What are the key takeaways for the good side and what are the key takeaways for the not so good side that you need to work on. Thank you very much for watching, and until the next video, do good things.